Hey everybody, Smart Silver Stacker here. Welcome to another live stream. Got some very big developments in the gold and silver markets today. We're taking a look here at the gold chart, the long-term gold chart. There's a pattern we've been talking about for some time here. We've got a cup and handle formation, and the notable thing here, the very bullish sign, is that gold appears to be breaking out of this handle formation. Now, there's maybe a pause here that we should take and not start celebrating just yet. We haven't closed yet. It's about 3:22 right now at the time I'm recording this, at the time we're live streaming. And, you know, what we really need to see here is the price of gold close above 2,100. So we still have about 30 minutes to go. We'll see. But right now the price is at about 21.16, so well above this top line here, the top portion of this handle formation. Now, what we would really want to see here to confirm that this is indeed a breakout is we would want to get this close above this line, maybe trade above it for a day or two, and then we want to see a decline. I see someone saying there's crackling in the audio. Put a 1 in the chat if you can hear me loud and clear. Put a 2 if there are some audio issues, and I'll address that. But what we want to see here is the price of gold go up, come back down, touch that top trend line, and let me see if I can address this audio issue. Okay, that should be better, hopefully. And what we would want to see is a retest of that line, but not a penetration of it. We would want to see the price touch the line and then resume its move higher. So, you know, we do have to wait and see here, but I do think at this point that the probability of the price of gold doing that rather than plummeting through this trend line is much higher. Now, someone here in the chat says, will silver go up? Well, silver is moving up today, and I do appreciate everybody who told me about that audio issue. I see some people saying it's fixed. Hopefully it is. Do me a favor, regardless of what's going on with the audio, I think it's fixed, but please smash that like button, help get this info out there, because we need to bring attention to what is about to happen in the gold and silver market. Now, let's talk about how high gold could go if this breakout really manifests itself. I would anticipate a price north of $3,000 at a minimum. Now, the reason I say that, I'm not saying it's going to happen overnight, but I think that could happen in relatively short order, because we would take the minimum of this bull pattern here, which is around 1,050, and then we would add that to the top of the handle here, which is around 2,100. That would give you a price of over 3,000, and that's kind of confirmed if you go to a inflation calculator. Gold's previous all-time inflation-adjusted high was back in 1980 in January when it hit $850. Now, if you adjust that for inflation using the CPI, it gives you a price of about $3,300 and $3,369. So well above $3,000. And again, I think that is a minimum target for gold, because the CPI doesn't quite account for the actual level of inflation. Yes, I see some folks talking about Bitcoin in the chat. We'll get to that. We're going to talk about silver too, and what will likely result from this bull market in terms of the silver price. First, I just want to say a big thanks to today's video sponsor, SD Bullion. I've got here some of their deals pulled up that I think, you know, even though the price of gold and silver are on the rise, I prefer to buy on the dips myself, but maybe if we get a little bit of a retracement down to that line in gold, it might be a good time to snap some up. Silver is still ridiculously cheap. Junk silver, $18.65 per $1 face value. If you buy it in rolls of $10 face, I think that's still a screaming deal. It might be the last time we can get silver for that price. I mean, ever in our lifetimes, not to be overly dramatic about it, but especially for junk silver. You know, we were talking recently about how a lot of very wealthy individuals are stocking up on bullion and how they are looking for barterable units. I think a lot of people are going to be looking for those things as it becomes clear what's happening with inflation and the U.S. debt crisis, which we're going to get into today as well. These coins, these small denomination silver coins, are going to be just very, very sought after. I think this is still a screaming deal. Not financial advice, just telling you what I'd be looking at. Also, They got Platinum Britannias on sale right now, $59.99 over spot. I think Platinum very cheap right now as well at $908. You want to get some gold? They got these any quantity gold bars. Yeah, gold's at new all-time highs, but it's going higher. So if you want really the safe bet, I think we would be looking at gold bars. Probably a safer bet than silver, and platinum maybe not as much room to run up. Now let's talk about silver here real quick, and why I think that we are on the verge of a big run up in silver. Now, typically during these metals bull markets, you see silver lag gold. Gold is the first metal to move, and then silver follows in the later phases of the bull market. It's still very early here, and you can tell that by looking at this chart here up top. We've got the silver to gold ratio, so a little bit different than how we normally do it. We usually look at the gold to silver ratio, but this is silver over gold. And then down here we've got the actual silver price. Now this goes back to about 2000, and I want to just talk about some of the things you can notice on this chart. One, when you see a bottoming in this silver to gold ratio, meaning silver is cheap relative to gold, that tends to coincide with a bottoming in the silver price. You can see that happened in 2008, had a bottom in silver, had a bottom in this ratio. That, of course, was a great time to be loading up on silver, as it then ran to over 50 or around $50 in 2011. You can see the silver over gold ratio spiked up because silver moved a lot faster than gold. Also, you've got this period here, the lows of 2015, a low here in the ratio, a low here in the metal, coinciding pretty nicely with one another. There was a pretty good run there. You went from about $14 to over 20, so that was some significant movement. That was obviously a good time to buy. 2020, the pandemic sell-off lows, you see a big spike down in this. That was a great time to buy silver. It ran from around, $12 it got down as low as, up to almost 30 in a very short period of time. And then today, you'll notice we are at the very low end of this ratio up top. We're actually lower than every other point on this chart, except for that 2020 pandemic sell-off. Now, I mean, barring a massive pan sell-off event, some kind of a major crisis, it's looking like the silver over gold ratio is at the absolute lows. And, that tells you just how much these metals have to run to the upside. We are just getting started, and it's not going to be until you see this ratio get significantly higher than it is now that we're going to start talking about, a top in this market. So the very nascent phases of this bull market. We've got Bitcoin also up hugely today, 7.44%. Of course, if silver's volatile, Bitcoin is doubly so. It's interesting that we're seeing all of these dollar alternatives catching a huge bid today. We've got Bitcoin about to take out new all-time highs. It looks like an all-time high for Bitcoin, I think, is $68,899, if I'm not mistaken. If I'm incorrect about that, put it in the chat, but I'm pretty sure that's the number. And Bitcoin, I think, is probably going higher too. We might see a little bit of resistance at the previous all-time high, but if there is a decline, it looks like this run has some way to go. I know people are very divided on Bitcoin. I'm kind of agnostic on it myself. I think that it has the potential to go much higher. It's a bit like a lottery ticket, I think. It's not necessarily the safe haven asset that gold and silver are, but it is an alternative to fiat currencies, and I think that accounts for what is going on here, because there is an absolute debt apocalypse around the corner. And if you judge from the gold price and the Bitcoin price, and soon to be the silver price, I mean, silver is having a good day, but it's going to be running a lot faster. People are becoming aware of this, judging from the movement in these alternative assets. We've got Nassim Taleb. This is an interesting one. He's the author of The Black Swan. Now, this is from January 30th, so a little older, but I just want to point out that, this guy gets it. He understands that there's a huge debt crisis playing out. Nothing is being done to fix it. In fact, they're just doubling down and borrowing more money, and ultimately, all of that debt is going to have to be monetized. Going to have to run the Federal Reserve's printing press like there's no tomorrow. It's the only way to make good on these obligations. You've got Nassim Taleb here saying, so long as you have Congress keep extending the debt limit and doing deals because they're afraid of the consequences of doing the right thing, that's the political structure of the political system. Eventually, you're going to have a debt spiral. Goes on to say, a debt spiral is like a death spiral. Yes, a death spiral for the currency. Also, Here's one from more recently. This is from yesterday, a reprint from Fortune on Yahoo Finance. Hotshot Wharton professor sees $34 trillion debt triggering 2025 meltdown. Yeah, I mean, who could see that coming, right? I mean, it's just mathematics. It's pretty straightforward, I think. It's not like the modern monetary theorists believe that you can just endlessly borrow, that governments are somehow unlike the rest of us, unlike businesses, unlike households, unlike corporations. No, they can just borrow endlessly. Well, yeah, they can, but the consequences are pretty horrible. And this article was interesting. I mean, this guy is issuing a warning cry. His name is Joao Gomez. I'm not sure if I'm saying that right. I'm just reading it. I've not heard the name pronounced, but the crisis he's predicting here is because of America's burgeoning public debt mountain. Says he predicts that America's $34 trillion debt burden may upset the world's financial markets as early as next year, should a president-elect announce a raft of expensive policies. And, regardless of which one of these candidates you support, it's hard to make the argument that anybody running for president is going to be doing anything except massively expanding the debt. I mean, the proof is in the pudding, as they say. The current dementia patient in the White House has expanded the debt massively. What is it, about $1 trillion every 100 days, I think is the latest. And the last occupant also, I mean, he ran up the debt tremendously too. There are no candidates who are talking about fixing this problem. And therefore, whoever gets elected, I think it is likely that there's going to be a lot more spending. There's going to be a lot more debasement. There's going to be a lot bigger deficits. And that means ultimately that investors are going to wise up and realize that the dollar, the U.S. Treasuries, are not the safe haven asset that they expect. And that is why Gomez here is saying rates could spiral to 7%, quote, or higher if the topic is swept under the rug by Washington. And that is what is going to happen. He points out the UK mortgage meltdown during the premiership of Prime Minister Liz Truss. And if you remember that, interest rates on UK treasuries began to spike. Their central bank was forced to intervene in the markets, to get in there, to buy up debt, to drive interest rates down. And that's what's going to play out in the US as well if we continue down this path, except it's going to be a lot bigger than what happened in the UK. And Kevin Nugent in the chat here says, oh, we're at the point of return. Yeah, absolutely. That's exactly the point here. There is no soft landing. There is no landing exit from this. At this point, we simply have to decide how we deal with this. The right way to do it would be to cut spending, slash entitlement programs, implement means-tested Social Security, cut defense budgets, stop engaging in wars around the world, except what we're looking at the political elites what they're pursuing is exactly the opposite of those policies. And so the other way to deal with this debt crisis is to print the money. Now, that's probably the worst way to do it, especially for you and me, because the currency that we buy things in, the currency that our food is denominated in, the currency that our homes are denominated in is going to be debased. And so everything is going to get much more expensive. But that's why gold is hitting a record all-time high. That's why investors are beginning to get into safe haven assets. And I mean, really, I don't think anybody's begun to rush into silver just yet. The premiums on physical are still very low, but that could change at any moment. If you want to know why, just look at this. This is New York Community Bank Corp, the regional bank coming under pressure due to losses from its commercial real estate portfolio. It's down another 20% today. Now the share price down under $3. I mean, this thing is getting massacred. The crisis in the regional banking system that has been playing out as a result of the Fed's interest rate hikes, their quote-unquote fight against inflation. It's not fighting inflation. Inflation persists because the government continues to spend massive amounts of borrowed money. And yet, the crisis in the banking sector is very real. So the unintended consequences of the Fed's interest rate hikes are playing out. Maybe they're not unintended. I mean, let me know in the chat what you think. I know some people think this is some sort of an orchestrated takedown of the U.S. economy to bring in a central bank digital currency, an engineered crisis. Put a 3 in the chat if you think that's the case. Put a 4 if you think that it's just incompetent bureaucrats trying to run the economy. I mean, I'm not sure which it is. Either one seems possible to me at this point, but I would be curious to get your feedback on that quandary. Now, we've got the interest rate today on the U.S. 10-year Treasury note rising once again. This number will be going much higher, especially when it becomes clear what's going to happen with inflation. You know, when inflation goes higher, it drives interest rates higher because investors need to be compensated for the loss of purchasing power in the note that they're earning interest on, right? So interest rates have to move up. That's a real problem when you have a regional banking system that is still, to this day, sitting on a giant pile of devaluing U.S. treasuries that were purchased when interest rates were much lower. You know, it's March 4th today, folks. On March 11th, the Bank Term Funding Program, the emergency loan facility that the Fed had created to take some of those treasuries off of the regional banks' balance sheets as collateral in exchange for loans, that thing is coming to an end. So the lifelines that the banks have are being taken away, and it's only a matter of time, possibly a very short matter of time, before this turns into a huge crisis. Now, I think there's a thing where people get very impatient with gold and silver. You know, I hear people say, oh, I've been hearing about this for years. I actually had somebody leave a comment the other day saying that they've been hearing about how gold and silver are going to go to the moon for 60 years. And I thought, well, if you've been hearing that for 60 years, you've actually had some pretty good bull runs along the way. I mean, 60 years ago is what, 1964? I mean, the last year that they had silver in the currency, if you bought silver at any time during the late 60s, early 70s, and you were smart enough to sell it when it spiked up to $50 in 1980, you did really well for yourself. Same goes for anybody who bought in the 90s and the early 2000s. Huge run up in 2011. Now, it's true, you got to, know when to get out. With physical metal, look, it's a long-term holding. It's very possible that this next time we get a spike up in the price of gold and silver in dollar terms, it might not come back down, and that might just be because the dollar never recovers. So, there's a lot of things that we need to consider moving into this here, but you can't get too impatient with this. I mean, yes, the debt crisis might not happen until 2025. I get comments all the time where people say, like, bring it on already. Like, you really don't want gold and silver to break out in a big way necessarily because it's indicative of a major crisis, which is going to affect all of us. But to the extent that you want to be insulated from the worst of this, the worst of the U.S. national debt and the inevitable crisis that it will usher in, you want to have your hands on some physical gold and silver. I mean, also right now, miners are incredibly undervalued. Now, look, I know a lot of people don't like these companies. They don't like stocks. They say if you can't hold it, you don't own it. And I tend to agree with that to some extent in the sense that, you want the physical metal as an insurance policy. But to the extent that you want to take on some more risk for the potential for much bigger paper gains, there's a lot of companies out there related to gold and silver, which the sentiment is just absolutely in the toilet for those right now. And, that could change in a big way if investors begin to anticipate and understand that gold and silver prices for the foreseeable future are going to be heading higher due to runaway inflation. So, there's a lot of opportunities out there to protect yourself from this. You can get foreign companies, that pay non-dollar denominated dividends. That's something to look at. There's a lot of things you can do to insulate yourself from this. But if you don't have, some physical gold and silver on hand as we head into this scenario, look, it's not financial advice, but I would feel hesitant to, face what's coming without some of this, because nobody knows how bad this crisis could get. I mean, this is an unprecedented level of debt in human history, not just the debt itself, but also the obligations, the unfunded liabilities, the $213 trillion in unfunded liabilities here. The Social Security, Medicare, all the things that the federal government is on the hook on. What was it that Alan Greenspan told us? We can make the cash payments, but we can't guarantee the gold and silver are breaking out. We need to take a look at this chart, keep an eye on it. If we get the close above 2100, and it looks like that's going to be the case, I mean, it's not coming back down, we might get a little retest of this line. That, in fact, would be incredibly bullish. That's what you want to see. And if we get that, I mean, I think it really is going to be a big breakout moment for the precious metals. Silver, a very undervalued asset. I think one of the most undervalued assets out there right now. All you got to do is look at the Dow to silver ratio, the Dow to gold ratio, to understand that both of these metals, in an era of massively inflated paper asset bubbles, stock markets hitting new all-time record highs, cryptocurrencies soaring. Gold and especially silver remain very undervalued, but I don't think that's going to be the case for long. These are not household names yet. They will be, though, by the time this is all said and done. So there's still opportunities to get into this stuff. I plan on stacking more while I can because the prospects for the dollar, not very good. Prospects for getting out of this debt crisis, not very good. Nassim Taleb, he says that we would need a miracle to get out of it intact. So let me know what you think in the comments down below. Stay safe and happy stacking, everybody, and I will catch you next time. Smart Silver Stack.